Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. This morning we are starting with a ceasefire. That's the word of the day, I guess. I'm Prashant. With me, my colleagues Surabhi and Nigel. Morning.
Hi. Good morning, folks. So much drama. Who needs movies these days or any kind of a potboiler or a thriller, right?
I disagree.
And that's actually true. Movies make the heart fonder.
But
and then we wake up this morning to, again, the declaration that Mr. Trump has saved the world yet again.
That's what he claims. So that's important. But I think the worst of this conflict is behind now, right? Going by all the indications, all the commentary that you got. Let's hope markets as well move on.
Absolutely, and that's the first line. The graphics will come up on your screen. The worst is over. Yeah. And actually, we were saying this yesterday that if Iran's response is weak, oil has got potential to fall a lot, and I think it has fallen a lot. I mean, 15% basically from yesterday's high. So let's just take it from the top in terms of what you need to know as we start this new session. Worst of the conflict is behind us. At least that is what it looks like. Trump has announced a ceasefire. I'm not going to go into details, but basically there are two tweets which we can pull up later. But basically he said that there's a ceasefire between Iran and Israel. It looks like, the ceasefire is for sort of 12 hours. I mean, it's a little complicated, but 12 hours. But the point is, a ceasefire, once it is announced, is easier to continue rather than announce in the first place. So, and that's the reason, that's the way I would look at it. There are lots of reports which say that Iran has said, well, we won't agree to a ceasefire. But don't look at what they are saying. Look at what they're doing. What they're doing is, oil, by the way, of course, is down about 15%. Yesterday's high was about $80 or so. It's down to 69, 67 earlier. So down quite a bit. As I said, look at what they're doing. Iran's retaliatory strike was weak. It was almost symbolic. It looked scripted. It was intentionally weak as well. So what did they hit? They hit, airbase in Qatar. They hit Iraq as well. I mean, U.S. assets in Iraq. But Associated Press reports that, for example, in the base in Qatar, there were no aircraft. There were some 46 aircrafts on the 5th of this month. They were all moved out. Qatar has confirmed that there have been no casualties, no real damage, etc. So, and this is what I was saying yesterday as well, that if the strikes are very targeted, that's the off-ramp which Iran is looking for. It's like, they can't lose face with their population. They've got to hit back, but it's targeted, it's symbolic. We've seen this earlier as well. That's the off-ramp. That's the off-ramp to de-escalation. And that's perhaps the way the market is looking at it as well. If it had been sort of, striking bases around the region in Middle East and US, has lots of them, that would have been sort of completely different. Then all bets would have been off, but that is not what has happened. It's targeted. It's meant to show that, well, this is happening, etc., etc. Now, to the point that many are making that, well, there are still missiles flying and there are still Iran has launched missiles. An hour back, I saw some news reports, etc. I would look at all of this as winding down in terms of the conflict, the worst of the conflict that we've seen before some semblance of peace and pre-escalation kind of returns. That scenario returns back to the region. We'll see. But expect rhetoric, commentary, etc. to remain very high, both from Iran and from Israel as well, over the next 10, 12 hours or so. By the way, just to go back to the market action, last night S&P was up 0.9%, Nasdaq was up about 1% gains last night. This morning, if you look at what the S&P futures are doing in Asia, they're up another 0.5% or so the last I checked. Dollar index is down about 0.5% as well from yesterday's high. So you've got this reaction coming through. We look at US Treasury futures. But the point is, Treasury markets, neither as we've said, dollar or bonds, US bonds, sovereign bonds, did not really react were not bid in any aggressive way in response to the attacks in the first place. So reactions in that sense are kind of mild. The big, cleanest way to kind of, look at what the market is making of it is oil. And the oil market is telling you that most likely the worst perhaps is behind. Later tonight, you've got the Fed Chair Powell's testimony before the House Financial Services Committee. And he will take questions from the House Services Committee. And this will be interesting because most likely he will be asked about his boss, President Trump's exhortation to him to lower rates and why he's not doing it. And it'll be interesting to hear his responses in that sense. Now, we don't expect to hear anything very, very new or earth-shattering or market-moving, but should be interesting nevertheless. I'll just tie in the levels, etc. So today, of course, all the oil sensitives, oil marketing companies on one side, which is on the way up, oil producing companies on the other side, and of course the other regular oil sensitive names, etc., should be in focus. We'll talk more about that. But for the Nifty, for the indices, right? For the Nifty, 25,222 is the resistance level. It's the recent high, the swing high. The support comes in at 24,824. That is the hourly low. It's the immediate support that we are going to work with. For the Nifty Bank, the resistance stands at 56,328. And the support stands at 55,600. Which is the swing low recently. So I think these are levels that you can work with. GIFT Nifty should give you a sense of how we are likely to open. Oh boy, 300 points nearly on the GIFT Nifty. So, zip up and zoom higher. The market reaction is very, very clear in that sense, both in terms of oil and, of course, what's coming through as far as the GIFT Nifty is concerned as well. Surabhi.
Absolutely. I think today is the day that bulls get that flip up they needed to get right back at the top of the trading range. And let's see if this time there can be a decisive breakout on the way up. By the way, you guys remember there's the NATO summit as well, which kicks off today. And last we heard was that Mr. Donald Trump said that he will attend. There was a lot of flip-flop whether he's coming, not coming. Last we heard he's going to be in Netherlands for the summit. And now perhaps he'll want to flaunt what he'll call another win in his crown, getting the ceasefire going. So for what it's worth, I wanted to put up the quote first, the abridged version of that tweet where he declared that there's a ceasefire and that the Middle East has been saved all over again. He says that it's been fully agreed by and between Israel and Iran that there will be a complete and total ceasefire for 12 hours, at which point the war will be considered ended. Officially, Iran will start the ceasefire, and upon the 12th hour, Israel will start the ceasefire, and upon the 24th hour, an official end to the 12-day war will be saluted by the world. That's what he's calling it. He's calling it the 12-day war. Remember, there was a 6-day war in the region many, many decades ago. During each ceasefire, the other side will remain peaceful and respectful on the assumption that everything works as it should, which it will. I would like to congratulate both countries, Israel and Iran, on having stamina, courage, and intelligence to end what should be called the 12-day war. Then, of course, he goes on to take credit, but this is the operative part of that post that declared that this is indeed perhaps winding down. Now, markets had been sort of reacting in that way. It was quite uncanny to see those missiles fly over Doha last night, and the markets kept rallying and oil kept falling. Oil was down about 7% to 6% last night itself. It's fallen a little more this morning. And Asian markets are up and about. Let's get the Hang Seng, for instance, up for you. That's oil. So we're talking about a fall off of $8 to $9 since Friday, since we were trading and we closed off on Friday. So almost a $10 decline. Look at the Hang Seng, a near 2% rally on that market. Most markets are up 1%, if not more. And that explains the exuberance on the implied open as well, that we saw about 300 points of a pop coming through. Now, the sense that at least I get looking at a lot of the cues around is that as this settles, the focus is going to go back to trade, which is a little more closer to the market's heart. And there, we need to keep on board that when it comes to the bilateral agreement between India and the US, the headlines, and they've been sort of, been buried deep within, but they're not very comforting. It seems to be a bit of a sticky patch on those negotiations between India and US. And the sticky patch is, agricultural products. US wants greater and complete access for all its agricultural products. India is not, very comfortable with that. And the second is GM crops. Again, US wants, complete entry. And that's something that's a bit of a sticky point for us. So let's watch for this. The July 9 deadline is also approaching. So this is a bit of a negative headline. But anyway, we'll cross that bridge gradually. Coming back to the flows in the market picture, like I said today, in all probability, we'll be right back at the top of the trading range, which is 25,200. Flows yesterday were negative, about 1,900 crores of selling from FIIs. Domestic institutions were strong buyers. We'll see how this plays out. But the momentum is on the upside today. Just a couple of stocks on your radar because they will be excluded from the F&O market from the 29th of August, as per the usual revisions that the exchanges carry out. They're on your screens: AB Fashion, CESC, Adani, Total Gas, IRB, Poonawalla, FinCorp. Just some names to keep on your radar, but promises to be a solid green start. Nigel.
Well, that's right. The gift if you're suggesting we're going to have a solid green start, and you'll be disappointed by the end of the day that if you don't go home with 200, 250 points on the Nifty itself. And the Troika overnight actually is favoring a big move in today's trading session because crude oil prices, that's the one that we track very, very closely. That's fallen sharply. And you have some kind of cooling off both on the dollar index as well as on the US bond yield. So all the three factors are in favor, pointing to a solid start to trade. Yesterday, there were a couple of positives, though. The Nifty Bank, both of them managed to conquer the 20 DMA on a closing basis. And also the Nifty futures moved into premium in comparison to a flattish number. So those were positives. But the biggest positive really was the breadth of the market. And you saw all through the trading session, gradually you saw that advancing line from starting at around 400 stocks that were advancing, ended close at around 1,250 stocks that were advancing. That is a clear positive telling you that the domestic players and the retail audience out here, as well as large HNIs, as well as the domestic institutions, they were allocating money. And that explains why the broader markets did pretty well in trade yesterday. The other factors, the India VIX, it's still at very, very low levels. Keep in mind, we have geopolitical issues that have been playing out. There's a lot of other factors as well at play at the global screen. And yet the India VIX is sub 15. That's telling you that, in fact, there is a fair bit of bullishness and optimism about the markets chugging along even from here on. What did the FIs do? Well, they added some short positions. Not a bad thing. They added some short positions. They unwound some longs. And they continue to remain net short with close to around 77% of their positions on the short side. You look at it in absolute terms as well. The clients, well, their long positioning has moved to around 68,000 contracts, while you have the FIs that are net short. I'll tell you what, this sort of a combination is actually perfect from a bullish perspective because an FI being net short with more than 1 lakh contracts, that's normally good times. And now you have a good start, could force them to cover some of their shorts. The options data comes up for you on the screen, and the call writers are getting very, very confident. Even in yesterday's trading session, between the 24,900 call as well as the 25,000 call, more than 40 lakh shares were added there. So there was aggressive call writing that we saw. But on the put side as well, there was 20 lakh shares added at around the 24,900 odd mark. So the levels come up for you on the screen. We're going to be starting above, in all probability, above the 25,150. But going by the options data, it seems the bears were playing for this level to hold out. Remember, this is closer to the high that we saw on Friday as well, of around 25,136. So I'll keep an eye on this level. On a closing basis, you want to end above that. On the downside, the support comes in at around 24,800. Yesterday's low as well is in this vicinity, so we'll keep an eye on that. The Nifty Bank, it's been in that 800, 850 point range. Yesterday, it conquered the 20 DMA. Today, you'll want it to get past that 56,350, 56,400 odd mark. That's going to be the important factor today. Since crude oil prices have cooled off, the OMCs will be in focus, and I'll keep an eye out on all of them. Yesterday, they saw some buying from the lows of the day, but HPCL, BPCL, and IOC could very well be the stocks of the day.
Okay, definitely watching out for them. Thanks for that, Nigel. Well, let's get you the equity call of the morning. Vikas Jain of CLSA says the past 12 months have seen Indian equity underperform emerging markets, world equity, Indian government bonds, gold, silver, and even bank fixed deposits. He says, despite this underperformance, Indian equity multiples remain elevated, that is, due to big cuts in Nifty EPS estimates. He says a combination of poor 12-month performance and elevated multiples, along with a huge lineup of capital raising and IPOs, may pressure equity inflows. They keep their near-term return expectations muted. He says sector rotation may hold the key, and that is CLSA. They are expecting triggers in the coming months to be more likely from global markets and recommend IT as an interesting relative bet. He says their India-focused portfolio is also overweight on staples, real estate, energy, utilities, and banks. Slightly cautious on the Indian market.
All right. Well, that's Vikash of CLSA with his thoughts. Let's